Yes, and we're talking about the property market again because it's propped up values in the property market for quite some time, but now there are signs of a downturn in the buy-to-let sector. New figures from the Royal Institution of Chartered Surveyors show the percentage of landlords selling their properties has risen to a 3-year high. New landlord instructions also dipped in the 3 months running to the end of October. Flats are the worst area affected due to a glut of new builds on the market. Investors have seen prices go up faster than the rents that they can command. However, those able to afford to buy houses are faring better because of continued strong demand. Well, Stuart Law is Chief Executive of the Property Investment Advisors Assets. Good evening to you, Stuart. What effect would it have on the general housing market if every buy-to-let landlord turned around and said, I'm going to get my money out, I don't trust what's going on?
Well, there'd be over 1 million properties come onto the market all at once, but of course we're not really expecting that at all. And as a landlord myself, I don't feel any great urge to sell any properties because, like most, we're all taking a long-term view. It's an alternative pension.
So do you agree with the figures from the Royal Institute of Chartered Surveyors saying that actually it is slowing down dramatically?
Well, what's slowing down? So many conflicting reports in the marketplace. We absolutely agree with what the RICS is reporting on. It's clearly stating that rents are growing strongly, but house rents, because houses are not being built in the same numbers as flats, are growing more strongly than flat rents. But whichever way you look at it, there's more tenant demand than there is supply, than new instructions, and that's been the same for 3 years now.
So does this mean that if there is a glut of new builds and it tends to be in the flat area of the market, does that mean that there is more hope that first-time buyers can actually get into that market as opposed to properties being snapped up by investors?
Well, I think investors have benefited from more practical experience in the market, clearly, than first-time buyers. And if there's any opportunity comes along in the market, I think first-time buyers are going to be outbid, and we're going to see investors moving quicker than they are. Where the opportunity arises is developers have historically dealt with buy-to-let investors much more with wholesale property than they have with the first-time buyer. And I think first-time buyers are going to get access to good deals over the next 6 months or so. But the weight of negative stories in the press arena at the moment is really going to demotivate first-time buyers, I think, from entering the market at this point in time. Whereas rising rents are visible to landlords, and I think they're going to act faster.
And briefly for us, what difference do you think it will make when the changes to capital gains tax come in?
Yeah, we've seen a little bit of evidence that some people are wishing to take advantage of the proposed changes, but of course those changes are on ice at the moment, deferred till after the new year, and I don't think it's going to make a great deal of difference. The landlords who are looking to sell at the moment, and it is up slightly over the last few months, up slightly to 6.5% of all instructions with letting agents. It is rising, but don't forget that that's how many landlords retire. They live off the rental income of their property and selling the odd unit. So I think it will slightly delay some people who are thinking of selling another unit or two in the near future until post-April, when it's clearer what the capital gains tax changes will be. But I don't think we're going to see a great weight of numbers of people selling at that point.
Okay, we'll wait and see. Stuart, thank you very much indeed for your time.
Thank you very
That's the business news this hour. We'll be back in the next hour with lots more.
Thank you, Julia.